We have $205 million worth of confirmed bullish flow that came in today. This is not somebody who's selling covered calls. These are people who are for sure purchasing bullish positions. But I posted this saying that we have $203 million in confirmed flow today. It looks like they're loading up to take out this liquidity level in the coming weeks. Before 5 minutes ago, this contract had only 1,200 open interest and 120 volume. This buyer alone hit 10 times the daily average volume for these contracts. The fact that it expires in October shows that this buyer is expecting a major rally into the summer. This was the biggest hit that came through that actually triggered the Alpha Gold alert. These calls were $195 strike. Volume is 1,824. Now you can see here that yesterday's volume was 6. The day before was 144. The day before was 74. So today, this buyer, look at how much more volume there was from the day before. So this is about 10 to 20 times the amount of volume on these contracts in a single purchase. And now what's odd here is that normally, 90% of options flow is worthless because a lot of it's not confirmed, which means that, you're able to be duped into thinking that maybe somebody's buying calls when really they're selling calls, which means that they're bearish. The other thing is that a lot of the times big money knows that they can't just go and put big orders in. They have to slowly drip their orders in. So when somebody just comes in, hits 2.55 million, takes out an order like that, and we already have $204 million, it's very odd because they're not saying F you, but it's very weird for them to just blatantly hit big orders like that because they know that a lot of people are watching. This person blatantly did not care, and most of these contracts came in right towards the close. This is very, very unusual. And the fact, too, that these expire in October means that they're expecting a bigger move. They're not expecting a move in the next couple of days. They're expecting a massive move. So now let's move over to the charts and let's just start with a very basic weekly chart with no indicators on it. I think that a lot of people think that I'm sitting here all day trading with like 15 monitors. That's so far from the truth. Like right now, I'm literally using an iPad for OBS and I have a MacBook. That's what I trade on. Usually I'm trading at a cafe on my private network, but I'm not sitting here all day in front of the computer. And that's not what I try to teach you guys, right? Like what I'm all about is freedom. I'm all about being able to do what I want, not having to really listen to anybody. Like that's just me, my personal goal, and what makes me happy. And so I don't want to be a slave to the screens all day either. And so what I teach with most of our students, since they already have full-time jobs and careers that they really like, they're just tired of trading their time for money. They want to be able to predict what's going to happen on these bigger time frames. So in the next couple of weeks, next couple of months, and maybe even over the next year. So what I have them always start with is zoom all the way out. Focus on the weekly chart and just start to get an understanding of where our overall market trend is. You can see here that Tesla has, as of recent, been in a bearish trend. If we turn on one of my favorite indicators called the market bias, which we have a whole course completely free down below talking about that, you're going to see that we are trading under the market bias as of right now. So the fact that we're under this means that we are not confirmed to be in a bullish trend just yet. Now, if we turn on my second favorite indicator called the BX trender, what we're going to try to look for here is if there's any bullish accumulation that's happening. We did get a flip to bullish accumulation back here on Monday, the 22nd of April. Bullish accumulation has been happening here as we're making higher highs on the BX trender, showing that we have a chance that we're going to test this resistance again. The time before, there was no bullish accumulation, a small amount the time after that, but now we're really starting to build up pressure here. If we take our forecast tool, you're going to see that from this resistance level up to our old resistance level is $260. So if this does break out, the highs that we could probably see, in my opinion, is 220, but up to $260 would be the main area. So now that we know that, we can actually come back even further if we wanted and look at a month. Well, if we look at this here, something different is happening now than before. We're actually getting a higher low on the BX trender, which is showing the start of bullish accumulation. And you can see that last time this occurred, when we had this type from low up to high, that was a 43% swing. The high was, up to about, 1.71%, but I would say that I probably really would have sold once we started to see weakness in this level. So that's what we're looking for, to see what the overall trend is first showing. And it's looking here like a potential breakout could occur. Now, when I see a lot of fundamental things happening for Tesla that I think are going to be very, very big catalysts in the next couple of months, we're coming up on earnings in July. We also have Robotaxi event in August. And I think that we're going to start to see Wall Street pick up more and more on the fact that Tesla is an AI and robotics company and that it's extremely undervalued when looking through that lens. Now, moving into the daily chart, which is the main chart that I really use, you're going to see that this trend line we drew before as our major resistance is now still going to be there, because this is the level that we're going to be watching. You're going to see that the wedge that we were covering before, this squeeze that was happening, has finally broken out to the upside. All of this shakeout that occurred here was from that event for Elon's comp package and the shareholder meeting. So once we pushed up through this level, the area that I was expecting was 190 to 200, but we ended up getting pushed down and couldn't hold over $190. Now, for those of you who have been trading for a while, you're going to notice that this is what's called a liquidity zone. This is a liquidity zone because price has rejected to absolute perfection when it looks too good to be true, and that price is just slapping a level too easily and just rejecting. That's called a liquidity zone. Now, what's happening is all of big money who is buying in down here needs to sell into usually retail. When I'm saying retail, I mean everyday people like you and me. We're not hedge fund managers. We're not people who are trading in Wall Street. So they're called big money. We're called retail. And something you have to understand is that if you're buying hundreds of millions of dollars worth of shares at $170 and you want to sell them at the top here, the only way for you to sell them is if there's enough people there to buy them. We're not talking about 500 shares, 1,000 shares. Like, we're talking about so much money that you need somebody to buy into it. And so price will usually reject at these liquidity levels because big money's taking profits, and they're taking profits into retail thinking that the price is going to break out, but it doesn't. So you can see that that happened here. They were probably buying this up on this stop hunt here. So imagine you're a hedge fund, you make 13% in a couple of days, you're going to sell into this, and every single time that we're rejecting, it's big money taking profit. Now, something that you have to understand too that's very, very important is that the more times we hit a liquidity level, the higher chance of us breaking that liquidity level. And once that liquidity level is broken, we are going to absolutely go parabolic. And the reason for this is once all of these orders are taken out, now there's nothing there. Think about like ripping a band-aid off of a wound. There's nothing there to stop it. Not the bleeding, but in this case, the breakout. So there's nothing there to stop it. We will easily make that move up into 200 and up to about $210. And so this is how I'm expecting the next couple of weeks to play out. I'm expecting potential rejections up to 190, potential lows of 177 or 175. Worst case, I think we could reject back into this liquidity level. But honestly, I think we're probably going to break out soon, rally into earnings, and then earnings will be the make or break to see if we hit $220. I hope this video helped. If you guys want access to all of our free courses and learn how to trade just like this, all of our resources are in the description. As always, guys, thanks for all of the support, and I'll see you next time. Peace.